Hi guys, this is Hector. Today is Tuesday, the 19th of February 2008. 20 minutes to noon London time. I've taken a long entry on the Kiwi, the New Zealand dollar against the American dollar on the 30 minutes time frame, based on on the uptrend that we've been seeing throughout the last few days. If I zoom out in my screen, you can clearly see this uptrend. Okay, those moving averages nicely pointing up, etc., etc. Moreover, what I'm liking is that if I zoom out into the daily time frame, we can see how a level of serious resistance, a level that's been working as resistance throughout the last few months. Okay, this is the level I'm talking about, the 0.7950. Okay. As you can see, it's been working as resistance. In fact, we've been channeling throughout the last few months on the Kiwi. Okay, on the daily chart, we can see how price has been bouncing up and down, and finally it's broken to the upside. So I've triggered a long entry. Now zooming into the setup chart, which in this case is the 30 minutes time frame, like I say. We can see a triangular formation. Okay, but firstly the nice moving average formation. All right, and then we have what it seems, or what it appears to me, a flat top triangle. Okay, with one key level to keep an eye on for the day, that being the 0.7980, 0.7985. This level, okay, had been working as the top for the New York session. Sorry, in fact, it held price twice in. Well, as the London market opened, we had the breakout to the upside. Okay, in fact, let me zoom in a little bit more in my chart. There we are. All right, that's the key level I was talking about. Okay, it held the price throughout the Tokyo session twice while making higher swing lows. Okay, basically we were forming a flat top triangle, building pressure to the upside onto this level. Okay, with that double top there, in building pressure, like I say, in the direction of the moving averages. Then as the London market opened, we had the breakout to the upside, nice run up, then retesting. We had the retest of the high for the Tokyo session. Okay, right there signified by that red bar. In fact, it's some sort of a hammer. This is the bar I'm talking about, by the way. Okay, with that hammer, I used I used that hammer as my entry. Okay, triggering my long entry upon the breakout of that hammer to the upside, setting my stop loss below that candle. The position was triggered on the next move. Okay, on the next bar, right there at. Right above the hammer, like I say, 0.7995. Sorry, I was thinking perhaps to wait for the round number to give way, but since I'm seeing how that level on the daily chart has been broken, okay, that level that I was just talking about, I figured I could trigger already my position, my long position, hoping to ride the momentum breakout to the upside. As far as the stop loss, like I said, this is placed below the hammer, right? 0.7982. It's a pretty tight stop loss. I don't want to take too much risk on this move, so it's placed down there. And as far as the target goes, what I've done is, since we've broken out from that congestion area on the daily, what I've done is I'm gonna be shooting in the weekly chart, okay, in the weekly time frame for the previous swing high right there, okay, which was somewhere in July 2007 at 0.8096. Okay, 0.81 below is in fact the actual top for July 2007, but I will exit few pips before hitting that level. All right. So basically, what I'm doing is spotting on the daily time frame a level of significant resistance, waiting for the breakout, and then zooming into the shorter time frames. In this case, the 30 minutes chart. In order to pinpoint my entry, okay, which came in the shape of a breakout pullback continuation of a flat top triangle in the direction of the moving averages, and then I'm just using the previous swing high on the weekly time frame, like I say, in order to to exit my trade or to set up my limit order. Okay, right there, 0.8096. I think that's basically it, really. Just a flat top triangle breakout in the direction of the moving averages. Nothing special about this trade. Okay, pretty typical setup. I explained this type of setups in the chapter number 2 of my trading course. And it's a pretty typical type of trade that I usually take. Okay, all right, folks. I'll keep you updated. Bye bye. Hi, folks. This is Hector. Right now it's 5 minutes past 2 p.m. London time, and I've manually closed the trade that I had open on the New Zealand dollar against the American dollar. Remember that I triggered off this breakout pullback continuation pattern about 3 hours ago, and I triggered my entry right there, and I've manually closed it down here for -9 pips. The reason as of why I'm closing this trade, it's because it's not really moving that much. I'm not quite liking this 40 pip drop that we've seen just now in the last 1 hour, and it's just a slow position, a slow entry. I'm not really willing to take that much risk on this one. Nothing really, no particular reason. It's just my gut feeling. It's just not looking good in my opinion. So I've decided to offset the risk, get out of this position. -9 pips really is no big deal. And I just I don't want to get burned on a possible heavy pullback to the downside. Like I say, I can't really point any reason as of from a technical point of view to close this trade, but having lost the 0.8000 round number, very strong level, once broken, run about 15 pips, 20 pips. Now it's gone back down. I don't know. That's definitely not the kind of evolution or kind of move I like to see on this trade. So like I said, I decided to close it out at -9 points. Call it a day, not a big deal. All right, bye bye. Hi folks, this is Hector again. It's actually late in the evening. I've just come back home just to check how the New Zealand dollar was doing, the trade that I took this morning, which I manually closed somewhere around that for a small loss, -9 pips. I was not seeing the momentum or this trade pulling through or delivering the momentum to the upside I was seeking, and I manually closed it down there, like I said, for a small loss. Well, as you can see, seems like I took the right decision. My stop loss, definitely my original stop loss, would have been hit right there, and well, I'm quite glad that I exited this trade manually, like I say. It's always even though I've scored a small loss, it's always nice to see that at least I avoided quite a larger loss than I actually scored. So despite the fact that it was not a good trading day, nonetheless I'm happy for having gotten out of a losing trade earlier before my stop loss was actually hit. Alright folks, that's all for this video. I guess a small loss, but well, nonetheless I'm pretty happy about having been able to minimize the loss on that one. Alright, bye bye.